Before we dive in, think about how you'd hook someone into this topic. If we look at the Core 4 framework for YouTube hooks, we could go with a pain promise hook, like, sick of renting? Here's Mark Tilbury's 3-step strategy to buy a house in your 20s. Or maybe a curiosity hook. 3.5 million people watched this millionaire reveal the secret to early homeownership. What are his 3 rules? If we want urgency, we'd say, if you're turning 18 soon, you need this credit card trick right now to buy a house in your 20s. What about contrarian? Forget saving pennies. To buy a house in your 20s, start using your parents' credit cards. Or combining curiosity and urgency. You will never buy a house in your 20s unless you follow these exact 3 steps. And honestly, that last one hits the nail on the head. That bold, uncompromising claim is the foundation of a viral strategy by financial creator Mark Tilbury. Today, in this explainer, we're going to break down exactly what that means. And guys, when I say viral, I mean truly viral. We're talking over 3.5 million views and 82,000 likes on this specific piece of advice alone. Literally, those numbers are massive. It tells us something absolutely crucial, right? This topic strikes a serious nerve. There's this immense, urgent hunger out there for a clear, actionable path to early homeownership, especially since so many young adults are feeling completely locked out of the housing market. So what exactly captured the attention of 3.5 million people?
Here's our roadmap for today. First, the homeownership dream. Second, the parent credit hack. Third, independent credit building. Fourth, growing your deposit. And finally, the final blueprint.
All right, Section 1, the homeownership dream, or Mark Tilbury's viral rule.
According to the source material, there are literally only 3 pillars that matter. Step 1, boost your credit via your parents. Step 2, build independent credit. And step 3, grow your deposit. Now, this isn't just a random list. It's a highly sequential strategy. Tilbury frames these not as, friendly suggestions, but as absolute prerequisites. If you skip one, the whole system just kind of falls apart. It brilliantly illustrates how buying a house early isn't just about stashing away cash under a mattress. It's a multi-layered financial game. Moving on to Section 2, the parent credit hack. This is step 1. So the very first move is actually pretty unconventional. You need to get added as an authorized user on your parents' credit card. Think about it. Instead of starting from scratch and trying to prove your own financial worth to banks, which is super hard at that age, Tilbury's strategy dictates that you leverage the established financial standing of your parents. It relies entirely on someone else's financial discipline before you even begin your own. Now, why does this actually work? Well, becoming an authorized user allows you to essentially piggyback on your parents' credit history. The direct result of this little hack, according to Tilbury, is an artificial and early boost to your very own credit score. You literally inherit the benefits of their on-time payments and their credit longevity. It gives you this huge running start in the credit system before you've even spent a single dime of your own money. Okay, Section 3, independent credit building, which brings us to Step 2. Now we transition from relying on your parents to securing your own credit card. And listen, the timing here is absolutely critical. You must get your own credit card the exact moment you turn 18. Like, it's a hard pivot. That parental piggybacking gets you off the starting block, sure, but the urgency of acquiring your own line of credit the literal day you hit adulthood, that's required to establish your own personal financial trust with lenders. But wait, just having the card in your wallet isn't enough. The completely uncompromising condition from Mark Tilbury is that you have to pay it off at the end of every single month. No exceptions. It's not about carrying a balance or utilizing all your available credit. It is strictly about demonstrating flawless discipline. Tilbury makes it super clear that this strict monthly payoff is the sole mechanism that actually builds your independent credit score from that point forward. Next up, Section 4, growing your deposit. This is Step 3. The first prong of this final step is to start a side hustle. Because let's be real, you can have a perfect credit score, but without actual cash, you aren't buying a house. Tilbury highlights the absolute necessity of actively increasing your income beyond whatever baseline you might already have. To buy a house in your 20s, a standard entry-level income just isn't going to cut it. You must generate additional dedicated funds through a side hustle. And here is the second, and honestly, perhaps the most difficult prong of Step 3. Stay living at home for as long as possible. Earning more money through a side hustle is only half the battle. The other half? Aggressively minimizing your expenses. By staying at home, you eliminate your biggest potential expense. Rent. Sure, you're trading away the typical independence and, much-needed privacy of your early 20s, but it's for the sake of intense financial accumulation. So when you put these dual actions together,
Starting the side hustle and sacrificing your independence to stay at home, they create this massive financial funnel. This combination directly grows your deposit, rapidly accumulating that massive down payment that a house purchase demands.
When we map all this out chronologically, the compounding effect becomes crystal clear. Before 18, you're an authorized user on your parents' card. The day you hit 18, you secure your own credit card and pay it off monthly. All the while, into your early adulthood, you're grinding away at a side hustle and living at home. The compounding effect of these specific chronological actions is exactly what pushes you to that final goal, buying a house in your 20s.
And finally, Section 5, the final blueprint. Let's summarize. So to recap the source material, here are the 3 distinct steps right alongside their guaranteed outcomes. Action 1, become an authorized user. The result, a boosted credit score. Action 2, get your own card at 18. The result is a solid, independently built credit score. Action 3, start a side hustle and stay at home. And the result of that is a massive, growing deposit. It's a highly structured cause and effect blueprint that literally leaves zero room for ambiguity. And that leaves us with one final, deeply personal question. We've seen the blueprint and we know the exact steps, but as we just saw, it requires immense discipline and a real willingness to delay typical adult independence. So, are you willing to make the sacrifices required to buy a house in your 20s? It's definitely a challenging thought to reflect on, and it perfectly explains why Mark Tilbury's rigid, disciplined approach captured the attention of millions. Thanks for hanging out with me for this explainer, and keep exploring these fascinating strategies.